Hello, and welcome to a new update from the Markets Middleman. Today is Thursday, July 23rd, and I'm about to share with you my preparations going into today, tomorrow, and early next week. Before I start, I really want to say big thank you for each and everyone watching these videos. The audience is growing. This channel is growing day by day, update by update. And this is a very nice motivation for me to not only keep on making those updates, but also to improve the quality of the content and maybe make more updates to clarify my strategy and what I have learned from trading so far. And try to always simplify it, make it as simple as possible in order for you to follow with this strategy and the structure overall. With that being said, let's hop onto the chart, starting with the DXY on the weekly time frame. It's been a while, price going sideways. It's been almost 4 weeks. Until today, the DXY made a very important confirmation. And I think it already answered the question whether we're going to see a further retrace to the downside or just continue from here. So just a quick reminder that we just broke out of 1 year range on the weekly time frame ever since June 22, and we corrected, and right now it's about to continue. I will show you why I believe so. And for the target to the upside, we still have a lot of room to the upside, starting with this buy side liquidity, which is a monthly fair value gap. But I think the ending point, not the ending point, but the target for this uptrend is gonna reach this weekly order block slash fair value gap. If I use the symmetry, okay, this is just a tool to understand the symmetry because this is how price move. I see that the meeting point between this channel over here, the lows from here, comes around this weekly order block, maybe during August. Okay, so why I think there's an important confirmation, I will show you on the daily time frame. But first, before I do so, I just want to remind you that I was waiting for the XY to tap into this daily imbalance. And it was somehow tricky because price couldn't confirm a change of character early on until today. Okay, that is most visible on the hourly time frame. So after the closing above the SPY side, I'm no longer waiting this daily fair value gap. Maybe after sweeping the SPY side and the monthly fair value gap, maybe we see a further correction into this daily fair value gap. But for now, I don't think it's a good idea to keep on waiting this fair value gap on the daily time frame. On the 4 hour, I will just show you why I haven't shorted the DXY, hence long the EU, when I spoke about the possibility of this bearish fair value gap. Simply because after confirming a break of structure to the downside, this was a very interesting area to look for shorts, or at least this order block area over here. But instead, what price did is that it inverted this fair value gap, this is the 6 hour time frame, and also was able to close above this bearish fair value gap as well. So within one candle, it inverted two bearish fair value gaps, which gave me the hint that this is no longer a continuation to the downside, and probably price created the low already by sweeping the sell side instead of breaking down, and then kept on going up. Next buy side breakout was over here, and then this was the internal change of character, retrace back into the order block, and right now we've seen already the displacement to the upside. So why I have a change of character over here? Simply because this was the last high created before the last break of structure to the downside. So the high between this low and this low was this high. So it's clearly on the 3 hour, 2 hour, and also the 1 hour time frame, obviously the close above this high over here. So the protected low automatically comes into this low over here because after this break of structure, price shouldn't close back below this low, otherwise it will turn bearish. So this is why it was kind of ranging. I couldn't have like a well-defined change of character over here before this internal buy side. So all in all, I think that price is going to continue pushing to the upside, sweeping this weekly low. First target is this week high. Again, another close above would open the targets for the full buy side as well as the monthly fair value gap over here. So what is the area of interest that I'm waiting the XY to retrace into? I simply use the simple tool, which is the feeble level, just to give me an indication. Before the 50%, I don't want any area of interest before the 50%. I will start look for areas of interest such as this 1 hour fair value gap, as well as this 1 hour order block aligning with this breaker over here. So no rush in buying the XY, hence selling EU. Okay, we don't rush to buy when price is high. Instead, we will just wait patiently until price start consolidating. Once it tap into this level over here, then I will start look into potential continuation on the lower time frame, such as a minor change of character on the 5/15 minutes and a continuation to the upside, targeting this buy side liquidity over here. Again, if before the day closes, we saw a immediate rejection. Price just went down aggressively, closing below this low over here. Then, only then, I would change my mind and no longer wait for buyers and instead wait for a retracement and then a possibility to tap into this daily fair value gap. But I think price could have done this before creating the change of character. So after changing actually the character to the upside, I think it's a matter of retracement and then a continuation to the upside. Once I have the structure done on the DXY, now it's much more simpler to me to transfer this into EU and the rest of the assets that I will discuss in this update. Now, from the previous updates, you obviously know that I'm overall bearish on EU. But I had one chance, okay, in case the XY wanted to target or to balance the daily fair value gap. I thought that the EU will actually retrace back into this level over here and continue to push to the upside, at least to sweep this buy side liquidity. But I haven't taken any longs on EU simply because right after price swept this buy side and tapped into the weekly imbalance, there was no room for continuation to the upside. In fact, look at this candle, how aggressive it was. Pushing down to the downside, the next candle already inverted this bullish fair value gap, and it kept trading around this level for a while until it made another internal BOS. This was the protected low that I had. But then I looked into the overall range. This was the last low, last high created. A new low was created after this new high. So automatically on the external range, this was the protected low. So this is why I'm making this update today, because all of this inside this range was just internal. Yes, it provided a sell setup over here after a break of structure, retrace into a fair value gap and break it, but it wasn't so sure. At the end, price could have made something like this, sweep the SPY side. So that's why I wanted to wait patiently until price breaks down below this low over here. So right now it's a complete change of character over here. Let's mark this together as a change of character, okay, to the downside, and wait for pullbacks. Right now, our job is simple. I go into the daily time frame. I see that especially if the day was able to close below this low, okay, then I will look into this daily order block to be the next potential area of interest for a potential short into this sell side over here. So I want to show you on the 1 hour time frame what actually happened. So this was the break of structure, first one, then another break of structure, then price trapped bulls today by closing above this buy side. It's an actual internal change of character, but it doesn't matter if price close only above a relative buy side. What matters is what comes after it. If price consolidated a little bit, then tapped into the bullish fair value gap over here and made an immediate rejection, then yes, this would be confirmed as a change of character. But there was a huge SMT with DXY and GU as well, following up with all of the USD pairs. So I didn't took that as a serious change of character, and I just saw it as a sweep into this buy side or Tuesday's high. So what happens here is the following. On the 1 hour, we already saw the close below this protected low, marking a change of character within the 9 a.m. candle in New York session. Look where the daily order block comes. It comes at a breaker on the 1 hour time frame. So this is the last push to the downside. I want the area of interest to be at or above the 50% Fibo level. So I will wait for price today to close. Tomorrow, a manipulation to the upside, maybe a tap into this level, any kind of inverse fair value gap, any kind of shift in market structure on the lower time frame will allow me to join sellers. And my target would obviously be the next sell side to the downside, basically, or the sell side from June. I think this was the low of June 2024. I will also mention another scenario which could actually happen. Let's hypothetically say that price couldn't reach the daily order block and just did something like this between today, early tomorrow Asia session, just took the tip of this bearish fair value gap. This could happen, okay? And if you follow up with price on the lower time frame and you'd be very patient, you might be able to join. But what I would like to do is just wait for the 50% premium. Why? Because at some point on the lower time frames you could actually get a fake move to the downside, and then price does something like this. In order to tap into the initial or the most important point of interest at or above the 50%. This is why I avoid buying or selling low, sorry, in this case. So my invitation to you is to observe price. If something like this happens without tapping into the daily OB, let's wait for another break of structure from this sell side over here. And right now, wait for the exact same thing all over again. Wait for a pullback into the 50%, So this becomes the last wave you're dealing with. This becomes the dealing range that you are dealing with on Friday or early next week, Monday, Tuesday, let's say. And then from here with the fair value gap, order block, whatever comes at or above the 50% Fibo level can be your area of interest to target this sell side over here. So this is multiple different ways on how you can actually trade this setup. But for now, before we have a range and a breakdown to the downside, I think this is the optimal level in order for me to start looking for shorts targeting this sell side over here. Moving on to GU. If you remember in the last update, I marked this as a change of character because we've had this low, making a bearish BOS from this low and making this a protected high. And that's internally true. However, the external range is still this high over here. So unless GU was able to break above this high, then yes, externally, overall, we're back bullish on the daily time frame. But instead, what happened? Look very close. After this candle closed above this high, price couldn't maintain the bullish momentum. And right after this gap open on Monday, I paused my bullish bias and start thinking that this could be a fake breakout, a fake change of character. This is why I corrected it from change of character into a buy side. When I have a buy side on my chart, this means that it's a sweep, like this one over here, like this one over here. And obviously when I have a BOS, it means that this buy side was broken to the upside. So I have a weekly fair value gap or a weekly BPR over here, but this weekly BPR is not coming after a proper displacement. So price just swept the buy side, and this is no longer the player value in this structure over here. Even though it's coming after a sell side sweep, but it couldn't break the structure to the upside and couldn't maintain it. So when I look back into the 12-hour time frame, for example, I see that this was a very interesting area that I was waiting price to retrace back into. But look how price is weak. It couldn't even balance this 12-hour fair value gap. I had this inverse over here because it aligns with this liquidity. Okay, so for GU, it's a little bit different than EU because there's some divergence between them. But both have one thing in common. They both have this change of character already confirmed. And why this low specifically? Because this was the initial trend, the last high, the last low, and the new low, a new high, sorry, created. So this becomes the protected low, since it's the low between the last buy side liquidity that was broken to the upside. So after the H1, I take the H1 close as a reference for me. In case I'm waiting for an external high or low, I wait for the 1 hour. In case I'm waiting for an internal, such as something like this, here I wait for an internal on the 15 minutes time frame, for example. I'll get into those details in a different video, but for now, I think we already broke the structure to the downside, so GU is bearish. Now here's the question, where's the area of interest that GU must return to in order to continue the push to the downside? If I go into the daily time frame, I see this as a breaker, but it's still low. Okay, if I go into the 4-hour time frame, after this 4-hour close, there will be a 4-hour fair value gap that has been created. But also notice one thing, this is a daily fair value gap. Okay, and GU is usually more volatile than other assets. So by the time the XY could correct into the 1-hour fair value gap, a GU could do something like this, tap into the daily and then push lower. The most important thing is not to close back above this buy side liquidity in case I want to stay short on this market, in case I want to keep my bearish bias. At some point, price could correct all the way up, okay, into the daily fair value gap and then keep on pushing down. Nothing would actually change the structure. But so far, let's say today closes like this, okay, a couple of H4 candles. This is a very nice area of interest, which would come, let's assume that price keep on pushing down to the downside. This becomes the 50 and the 61% Fibo level. This will be the high with a confirmation on the lower time frame over here. Could open up the target such as this sell side and those two relative equal lows over here. So I think this would become the within the overall trend and very logical to happen for GU. So most important thing, avoid selling right now, because the market is always gonna correct back up. Even though we see something like this, even it did not give you the chance to short from a fair value gap, just wait for another sequence to be created and then wait for the exact same thing. The most important thing is to know your dealing range, is to know whether you are still waiting for an internal retracement or it's time to wait for the external retracement of this full push to the downside. In case a major thing changed within the structure, I will just share an update regarding this setup over here. Now, after some time taking my time away from this pair, which is the AUD, I think right now it's offering something very nice as a continuation to the downside. And also I mentioned this weekly order block in the last update, but that we couldn't actually sweep or tap into the weekly order block. In fact, it engineered a buy side liquidity which was swept within this week. So this was really significant. And if I go into the daily time frame, price couldn't make a new BOS or a new bullish break of structure, and instead it just swept this high. And so far on the hourly time frame, such as the 1 hour time frame, just give me 1 second till I clarify all of this. Look what happened. Okay, this was the last low created before the new high over here. So I marked this after this 1 hour close, I marked it as an internal change of character. Why just internal? Because this is the protected low. This is the external protected low on the 4 hour time frame. So if I go to the 4 hour time frame, this is the trend. Okay, this is the last low, high, higher low, a relative equal high, but then price changed internally the market structure and about probably and more likely to break the structure to the downside. So I have two ways in order for me to trade the Australian dollar, which I'm actually interested in trading it within the upcoming couple of days. First, I already have another break of structure. Okay, so I have an internal change of character and I have an internal break of structure. And I have this 4 hour order block over here, engineered right at or above the 50% feeble level from this existing wave. So let's assume price retraces back up from here before taking the protected low. I'm gonna start shorting price at this level, protect my stop loss above those highs, and target these sell sides over here as a startup position. Okay, let's say that price couldn't offer us an entry before actually retracing back into this 4 hour fair value gap and then closing below this protected low. Then I'm gonna be doing the same exact thing. I'm gonna take my feeble level and I'm gonna identify probably here market would offer me an order block or another fair value gap. This would become the area of interest for me to push to the downside. And after this push to the downside, I'll be more than sure that there's an external change of character, and this becomes a change of character in order to for price to continue its push to the downside. Let's return this into a change of character, a potential change of character. So the daily fair value gap was mitigated and balanced already. So even though price taps into it right now, it could serve as a retracement into this 4 hour order block, aligning with the fair value gap, but it's not the main player anymore. It worked, it swept the sell side, and it pushed price higher back into the buy side. So the job for this daily fair value gap is already done. So right now it's no longer important. So keep this level on your radar, on your chart, okay? Of course, nothing is a financial advice. This is just for educational and observational purposes only. So moving forward into gold, I'm not going to spend a lot of time on gold, but I just want to note that it was weak enough to sweep the SPY side, and it had been within this kind of range price action for almost 4 weeks. So last time price ranged or corrected for 4 weeks, it was over here. So right now, after sweeping the sell side, but still confirming a break of structure, price went into sideways movement. But within the sideways movement, since everything is starting to take over and the trend is continuing, I think this buy side liquidity over here was enough to be swept. Okay, yes, it closed above, but again, a sudden or an immediate rejection off of it, marking a change of character on the 1 hour. So we've had this again, this high, this low, and this high over here, making this the protected low. Within this candle, it changed the structure to the downside, and price is bearish on the 1 hour time frame. There was a daily fair value gap over here, but look how price reached this daily fair value gap. And plus, this daily fair value gap did not come after a obvious break of structure. It just came within a range. So when a fair value gap comes within a range, no break of structure, it's actually a fake bullish fair value gap, and price doesn't usually respect it. So this is a very important distinction when you are searching for fair value gaps to work with. Now, here's the thing. I have this as the whole market structure shift, so I can view this as low, high, and then the full market structure shift. I have this 4 hour fair value gap aligning with an order block over here around the 50% feeble level. So around this level, okay, I'm gonna be searching for potential shorts for gold, targeting this sell side liquidity over here. So this is my plan for gold, and I'm also aligning this with silver, which I will pass quickly after I finish this idea. In case we saw this level fails and price continue the push to the up, only then I would consider waiting for price to sweep this buy side and take out the 6-hour fair value gap. But when DXY, this is why I shared the DXY in the beginning. Once the DXY confirms an important change of character, or a bullish move, or a bearish move, whatever the move is, when DXY actually confirm it causes the repercussion for all of the markets. And this is why I'm confident about shorting, buying any asset only when I know where the DXY is heading. So this is my plan for gold. Very simple, yet very straightforward to the point. And last but not least, let's remove this alert from the charts. So again, same thing on the silver. Silver still confirmed a bearish change, bearish break of structure to the downside by closing the full day below the sell side. And there's more room to the downside from the monthly fair value gap, if you still remember. So the plan here is similar to gold. Look, after sweeping this buy side over here that comes from Friday, July 10, also same thing that happens on the gold. Change of character, close below this, and this 1 hour fair value gap was not mitigated yet. So this high of this candle wasn't mitigated. So if I take my Fibo level again, I want to be shorting from a premium. This is where the fair value gap engineered around the 50% Fibo level. So just the 2 hour for clarification. Again, silver is very similar to the plan on gold. Retracement back into premium, fair value gap, and targeting the sell side over here. So I think this is enough for this update. I try to give you a very practical setup that you can watch this video, mark your charts, and just wait maybe a couple of hours. Sometimes it's longer, maybe a couple of days. But what's important to me is for you to understand the structure, the overall picture. It's been a while I haven't taken any trade. Actually, in July, I'm taking it slow a little bit since it's summer and I have a lot of things going on. So I chose to trade less. But either ways, the market conditions are not at its favorable right now, even though I like consolidating market. And I think maybe it's a little bit different opinion than other traders who only like trending markets. But when the market is consolidating, I think it provides more opportunities than when it's trending. Because in trending markets, the price is usually fast. So you're either in the trade or not. But when it consolidates, it gives you different bias. It offers you more setups actually, which I will discuss and I will dissect consolidating markets much more in the future. But for now, with that being said, I want you to be patient. Just wait for some time in order for price to tap into the area of interest. And notice that this is not a blind decision. So even though price passed the area of interest, just make sure you take a confirmation on the lower time frame and then wait until price unfolds your setup. Again, this is not a financial advice. This is just my opinion and for educational purposes only. Again, thank you so much if you made it that far. I really appreciate each and every one on this channel watching the videos and taking this into consideration. Let me know in the comments if you have any question, and I see you in the next update.